Now I want to remind you of the characteristics of the lines. What we're looking for, what's important here on the lines. So the key characteristic that we're looking for is that price does not violate the line, or what we call mitigate the line, meaning price doesn't go back through the line to any and close with a closing on the other side. So a candle that would close back would have a body close below the line, the white line. That would be a mitigated white line or violated line. Okay, so you'll see here that price, as it took off here, never came close to it. Same here, didn't come back to it. Didn't violate the line. Came up here, this is our entry. It never violated the line, and so we're still good. Now, again, price can dip down below the line, but as long as it closes back above it, then it's still good. It's still good. If it closes below, that means we're in an area of congestion and we're out of the trade. So just to be clear. Okay, again, white line created and it held. No violation. I did. Over and over. Now, right here, you might say, oh, John, this price did dip down here. Actually, it didn't. It didn't ever dip down because this white line didn't actually form until price changed, until it popped over to this candle. This white line was not there until this blue candle was made. So this wick on here was already there. So it wasn't even here. We were still writing it up from this white line here. Price was just, it dipped back down and did not violate this, so we didn't get out, and it just continued up. So it is when it finally starts to violate lines, that's when you know price is going into consolidation, or obviously on our target here when we see our first yellow line. Now, you need to review some other videos because this yellow line doesn't mean the run up is not over. It could have come back down, could have tested this line or whatever, and it could have continued up higher with a white line forming to push price higher, and we would be right back in the trade. And further, we would estimate now that this yellow line is actually just a halfway point from down here where the move started, and we've got a long way to go. All right, so those are things to keep in mind, but generally what we're looking for, we're going to just be out. We are out anyway when this line forms, unless otherwise it shows the price is reforming with the white lines above it. In this case, it did not happen. Okay, now let's take a look at more detail to show you this characteristic in detail. I'm going to come back here, I'll expand it a little bit more. So we can see, even when we weren't trading, we're in congestion here and we're waiting for price to come up. But look at the characteristic strength of there. So here's a white line here, and you can see that this white line didn't hold, but it had a yellow line here, so you would have been out right here above it had you even got into it thinking, oh, okay, well, this is a white line above the EMAs, okay, which is what we're looking for. You could have been fine, but as soon as you saw that yellow line, you'd have to get out. You would have got out here, and you would have got out with near break even. All right. Price did come back down here. It closed below. So these candles here, right here, closed below the white line, showing you this is a congestion area. From here to here is congestion, and we can expect more candles to form and more white lines and yellow lines to form inside this area. But now I want you to see something. We're keeping an eye on white lines here because we're clearly in an uptrend here. And we're looking for, well, what white lines are not being violated. All right, so this is very important because it can help you kind of see and gives you further confirmation of what we're doing here. So this line was violated, this white line was violated, but look, if we go back, we're always going to find a white line that was not violated. So this white line here was never violated. So price went up off of here, it wasn't violated. This white line was violated at some point, all right, but this line was not. So we actually have all the way here at the very bottom, we have a white line that was never violated. Okay, we have this white line that was not violated, and you can see it's in a gradual uptrend. All right, so then we had this one that was never violated. Then we had this one here that was never violated. We then had this one that was never violated. And then we got into congestion here. Okay, so we're clearly seeing this higher white lines forming without being violated. And so we're expecting another white line to eventually form that doesn't get violated. This is just something to kind of see the power, the characteristic of these white lines. So then we have this one right here, which started pushing the price up out of this congestion area that we had determined was a congested area. And we're seeing the same characteristic: no violation, no violation, no violation. So this gives you further confirmation that this is what's going on. Now, let me go to, I'm recording this on Saturday, so we just got done. This is the 21st. So just going forward to show you how we ended the week, and the same ideas here. So here we had a white line form at the bottom here that started to push price back up. Price never came back down to test it. And we had another one here. Price never violated this white line. So we had price come back in here. We had a white line here, but of course it's short. So the longer white lines means that there was a huge volume, much more volume than the short white lines. So keep that in mind as well. In fact, it's 1.7 times the volume of the previous candle, which means that there was a huge volume. Let me show you that in the indicator itself. Okay, so we're in the Spike Pro V2, all right, and we come down here. It says big spike multiplier. This is just what I've determined over the years, that this is when volume is 1.7 times bigger than the previous volume, it means suddenly buyers came in, or if it's going down, that means sellers came in at a very big volume spike, and this is a very important spike. The normal length is for the lines, these small lines here, is 4 bars wide, and you can adjust these by changing this out to whatever you want. But this right here is telling you about the multiplier. Okay, so let me cancel that. But before I do that, look, I'll show you just an example here. Let's say we wanted to see the lines all being a little bit longer. You can adjust that just by increasing this. That's 4 bars wide. Let's take it to say 10 bars wide. Okay, and hit apply. Okay, and you'll see those small bars now get even longer, and the longer bars, the big multiplier, the big volumes, they get even longer. But you can also see this kind of gets messy, but it also very easily clarifies for you where your congestion is. Look, it's a total fence line here now. Okay, so let's redo this, because again, depending on how wide your charts are, if you tighten this up, you might need to lengthen those out so you can see them better. Okay, but I'm not really doing that in this case, so we'll leave them there. But back to the characteristic: not violated, not violated, never violated, never violated, never violated. So again, we're back into a clear uptrend. Okay, which cannot be said for any of these yellow lines. They've all been violated all the way up. Okay, but on the way down, we had a yellow line here, not violated. We had one that was violated here, okay, because we closed above it up here. And then the next one that we see that wasn't was here, and it happened to be in a green zone, which is a double whammy, right? It means, okay, this is we're below the EMAs, both EMAs. It's widening, showing that it's definitely in a downtrend. We have a yellow line forming inside or near the top or bottom of a green zone, which further is a really good sign. We have a clear violation, a white bar here. That was sellers trying to push price back up, but they failed. They're out of the game and they're trapped. So all these sellers are trapped in here, from here all the way up to here. These guys are trapped, and price is probably not coming back up anytime soon during this time to release them. So again, a great indication. This bar right here would have been the bar to get short on, and we have another one right here, clear, boom, boom, boom. Here, boom, boom, boom. We came down here, and what did we do? We did just the opposite of what we just covered when we got to the top, and we formed a new green zone at the top. Well, here we're forming a new gray zone at the bottom, indicating we probably reached the bottom. And now we're looking for a white, or we can just get out when we see this. It's a safe way. It's definitely a safe time to get out. Rather than waiting for this bar to form and then get out up here, you could have gotten out down here. In fact, you would have gotten out right here when the when the gray zone formed. You would have got out right here at the very lowest almost, and it would have been a perfect trade for you. A lot of money even at the end of the day. So let's go back and take a look at some other stuff. Here was the end of the day when we had a nice run up. We had a zone. We had a congestion area here. We came out of it on this bar, price pushing above both the EMAs. That's a good sign. And then it was off to the races on this one. Again, this bar wouldn't have formed until way up here, and you missed most of the move. But this one right here, coming up into the green area, where now we have this whole green area right here, which is the target area where we think price could move into, and we're just looking for it. And so once price moved above this bar right here, could have also been a good place to enter, and ridden the price up as well. But this shows you again the characteristics of what's going on. And here we had a green line that was formed way back over here, and price actually reached to it and popped down, leaving a super big wick. That would have been a lot of money that you would have seen in your account here or in the trade here, and disappeared when it came back down here. This definitely would have been the time to exit the trade up here. But you could have also exited when you saw this, when you saw price start to come back down here towards this one. You could have got out here as well and still made a nice profit. Anywhere along here would have still been a nice profit to make. Let's go back and see some other things on the way down. Same stuff applies there. You'll see this on all your charts, no matter where you go. So here we see the yellow form here, all the way down under both EMAs. The yellow was here, didn't get violated. You see, this is a good sign too. When it wicks through and comes back down and closes below this yellow line, okay, because you kind of have to extend it in your head, and you can see that held, which tells you, okay, this is a great place to enter for a short, and put your stop right here. So tight, it would have been a tight stop, so that you can't get violated out of that thing, and ridden this thing down, because now we have this one. We know this is probably not going to get violated because again, it's on these green and a new green one that formed here, a double whammy that says, okay, more buyers are getting trapped in here and they're stuck there, so they're not going anywhere anytime soon. Price continues to go down, and the sellers are pushing price down. We had another one here, still didn't get violated. We had a white line here, which is an indication, okay, this would be a good time to exit. And I would have exited. As soon as I saw the white line form, I'm out. And it would have been a ride from there to there. And you're talking about hundreds of dollars in profit there, well over 500 probably, with just a few micros. And then it formed again here. So we formed another one here, another green zone here, below the EMAs, and we have a yellow inside the green. Double confirmation. This is another down push. So we're not done. We also did not mitigate this bottom gray area, so that means we're probably pushing below that. So it would have been a great, as soon as price came even down in this area, in this yellow formed, anywhere in here would have been great. And then you could ride it all the way down to the bottom, and you would have had another great place. Now, since white didn't form, you could have held, and you would have just seen another yellow, and white finally formed here, bounced off of here, and it, again, another exit would have been here. because we had another yellow form right here, and price, it did close above there, so I'm real shaky at this point about what price will do. But then it dropped below here a couple of times, and this would have been another area to get in because these buyers are trapped in here, and we could have ridden it down again. We had a green finally form again, and this would have been an exit right here when price violated the green area. Instead of respecting the top of the green box and continuing down, it didn't. It came back in here, and boom, we're out. So these are just additional ways of what you're going to learn as you watch and learn more about the candles, the zones, and the white and yellow bars.